US dollar yen to top between 137, 137 and a half. And I want to start off with the daily on the yen. And this is kind of a classic three drive pattern that I've taught for well over a decade or two. So very interesting formation setting up. And where's the disconnect with the yen making new highs and yields on the 10-year? Not even close to the high of the last Fed meeting. Look at this. So yen making higher highs and yields making lower lows. Here's a lower low. Here's a lower low. I'm not saying that we can't have an ABC back to here, but it's looking more and more like yields are topping, at least short term. Of course, this says there could be another high. Regardless, I think that there's a good chance of, well, look at where the yen is now, and we're still 33 bips under the high that we had on the Fed on this negative candle. So I think that the correlation between yields and the yen will come back. And right now, something's got to give. Either rates have to shoot up to catch up to this action in the yen, or US dollar yen is in a topping mode. So as I look at US dollar yen on multiple time frames, here's the divergence on the daily. It's pretty glaring. We're well under 70 here, even if there's another, 60 pips or so to the upside in the next day or so with some inflation numbers coming out. And let's look at the 4 hour. 4 hour is not confirming. So the 2 hour is trying, but compared to this, it's not. So there could be a little work that's going to have to be done. 1 hour is confirming. And the first one you want to look for to turn negative is going to be your 15 minute. So it may have to do some work up here. I would say if you've been greedy and naive enough to ride this whole thing up to the upside, I know people are talking 145, and I'm not saying this is going to be the end of the bull market in the end. I'm saying this will be an interruption and a cleansing of all the bearishness of the yen, bullishness of US dollar, Japanese yen, if you pair it that way. So look at that formation. And, let's monitor the potential third drive here on the daily in the yen. And now let's get to the dollar, which is firm today as well. So it doesn't look much like the yen here on the daily, right? But go out to the weekly on the DXY, and you have a very similar pattern emerging. This was drive 1, confirmed high. This was drive 2, where it's diverging, and I'm actually looking for one more high over the 106 level towards 106.30 or so in the coming days, coming weeks, and potentially significant, or at least an interruption in the bull trend. You never know if you have a major turning point until you look in your rearview mirror several hundred miles down the road. But this will be a probe and protect. I'm looking for shorting opportunities above 106 in the DXY. So that pretty much covers what I'm looking for in those two. Let's get to the commodity currencies. As you know, I've been waiting a while for this to develop. And when you look at the Aussie on the COVID low, the Aussie has given up the least on this dollar rally, the commodity currencies. So I'm looking at, around 67, 80, 67 and a half for potential buy in the Aussie. That should commensurate with perhaps a 106 level, 106.30 in the DXY. Gold seems to be fighting dollar strength. They can't break it. They're having a hard time breaking it. Silver really dogging it, and it's getting harder and harder to maintain my bias. Perhaps we are going to make a new low in silver. I'll hold my unleveraged positions in the silver miners and buy more if that happens. Say the silver tries this trend line down here under 20 bucks. And then the next stop, if we're not going to hold here, and if I'm right about the dollar going to above 106, I'll be interested to see where both silver and gold is, because it is my belief that we need a bear market in the dollar for both gold and silver to really begin to accelerate. That's going to be behind it. Not as inflation will still be there, but it will be more about dollar debasement if we put in this important high above 106. You guys know, if you just go back several months, I was bearish of copper up here and Freeport McMoran, and said that you were better off being long gold than copper, because copper is about construction used in building up things, and gold is about destruction, mainly debt. So that, and currency destruction. So gold holding up much better. Gold still acting much better than silver. Here's an important number for you to keep an eye on in the gold. Let's just clean this up. This 1840 level is key. Look how many times we've tried to clear it. Closes over 1840 will set gold up for a move to the major resistance line, which is going to be right here on the old breakdown, you know, right around this 1889 level. And that would negate the descending triangle breakdown that we had several months ago. And also will be challenging a downtrend line off the prior two highs, a little lower, more like at the 1870 level, 1865 level. So these are the next barriers for gold to penetrate to set up a rally up towards 1980 and eventually to new highs. I still think that when it comes to gold, I know there are a lot of bears now, especially with the story of gold sales being sanctioned from Russia. Russia is going to be the largest gold producer another year in the world. So I don't know. Our sanctions really didn't hurt Russia when it comes to their currency. It's everyone tells me I can't trade it because you know, spreads are too big, but the rubles recovered everything, even though I guess on the black market you could get things cheaper. And I also want to address just two more markets before I say adios. The oil market after last week's break, pretty big break. I tried to scalp yesterday, was good for over $1. So we're back into the probe and protect mode in the crude. And, you know, I could do some fib studies, but, you know, this 115 level, I think is going to be pretty stiff. And I'm not in the camp of looking for new highs in 150, but that this will be a failing rally, which, you know, could be commensurate with a weakening dollar. When you think about it, oil and the demand for oil and the payment for oil in dollars is also a prop of strength for dollar demand. So if we actually had a break in the crude market, it's my contention that demand for dollars would drop. So that's my take, and I still think eventually we're going to head back down towards this descending triangle line at 94 and then head to much lower objectives. So still stalking this for a possible shorting opportunity. And I think I've covered everything I want to talk about in currencies and commodities. I just want to go over the S&Ps, which are in their second day of a sell-off here. And I know a lot of the bears feel real confident. Oh, this was just another bear market rally. They could be right. I think that the strong dollar is also a test for the S&Ps. I talked about it with Mike yesterday, that strong dollar is usually risk off. So we'll see what the S&P is due with another 150 points, and the dollar index up over 106, where it leaves it. But I'm expecting 61.8. Everyone's pointing at the 38.10 level, which was a breakout, but I'm thinking maybe 37.50. And I'm not looking for new lows right away. I'm looking for at least equality of this wave from wherever we bottom. I think the interest rates declining and heading lower on the 10-year will be supportive of the market. But this was one heck of an advance. So after 310 handle advance, for us to pull back 160 handles or so would just be a normal market correction. And then if we got the 310 from here, which would be a quality of this rally, we'd be talking about 40.80 up here near this major trend line. So that forecast is still on. Russell has been leading up until today. I want to see what it does back at this gap. Looks like it wants to negate the island, but I'm not expecting new lows in the Russell. I think there's also going to be a buying opportunity here. And I want to let everyone know that's listening to us now that I'm going to have Joseph Wang with us tomorrow. And Joseph was a trader at the Fed who left a career of being a lawyer to going to get, I think he went to Wharton, an economics degree, and then working at the Fed, who has called this, what the Fed has done, very unusual to be able to talk to a Fed insider who actually worked on the desk at the Fed. So mark your calendar for 9:30 a.m. tomorrow with Joseph Wang. His Twitter handle is @FedGuy12. I have some interesting questions to ask Joseph, especially with him being a hawk, thinking the Fed's going to, continue. The Fed doesn't care about crashing the markets right now. So it's a don't miss it interview tomorrow with the Fed Guy 12, and wish everyone good hunting the rest of the day. Mike will be with you in an hour and 20 minutes. Good hunting. And, just to remind you, looking for a top here in US dollar yen between 37, we got up to 36.95 and 137.50. And if the dollar can generate one more decent rally like it's shaped up to do, and we get over 106 towards 106.30, that would be a sell zone for me in the dollar. A top pick. Don't use a lot of leverage, use big stops, let it breathe. And most of all, don't just count your pips, count your blessings.